Lombard and CNBC TV18 present India Risk Management Awards, honoring the new age risk management practitioners.
The word risk has assumed a whole new meaning in the last 3 years, first because of the pandemic and more recently because of the totally unexpected Russia-Ukraine war. But one organization and its leader, ICICI Lombard, and its managing director and CEO, Bhargav Dasgupta, have been kind of goading India Inc. towards the understanding of risk management. For the last 8 years, they have been supporting CNBC TV18's initiative for an India Risk Management Awards. And this year, there were 550 companies that were putting their hands up to participate in these awards. Well, today I have the man himself, Bhargav Dasgupta, to speak to us about insights into risk management and how the current context for risk has changed. Mr. Dasgupta, thank you very much indeed for joining me today.
Thank you for having me, Latha. Pleasure.
Well, let me start with what is confronting us right now, the Russia-Ukraine war. It's quite possible that the geopolitical kaleidoscope will change rather dramatically, and maybe yesterday's allies will be tomorrow on opposite sides, and yesterday's enemies will be tomorrow's allies. Now, in such an environment, how do companies prepare for sudden drops and sudden stops in supply chains and commodities?
Latha, these are what we call the Six Sigma events, right? Black swan events that you can't really predict and prepare for. What you can do is have an organization that is as agile, as flexible, as resilient as possible. But it's easier said than done. Now, if you look at just this one particular incident, it's very difficult to predict the future. It's a very hazardous game. But as you rightly said, it's highly possible that this will potentially change the world order. We've had, since the Cold War, broke down, ended in 1991, we've had a certain world order. Yes. We've benefited from the world order in terms of globalization because, countries have worked with each other. We've seen trade, we've seen commerce, and all of that potentially is threatened. So one of the things that we do worry about is what you just said, that we could end into kind of a bipolar world or a multipolar world, and that itself would have a tremendous impact in terms of the global geopolitics and globalization and the economic impact for different organizations. Even assuming this war comes to an end, which is to me looks like a optimistic scenario, given what we're just seeing in terms of the Bushan killings, etc., and the global outrage. But even let's say a best case scenario, the war comes to an end, I think the impact of the sanctions will stay for some more time. Yes. So the other impact that we will see is higher commodity prices, interest rate going up, inflation going up, and that has consequences. And the last thing that I'll talk about is what we've been calling, people have been calling weaponization of finance and trade. And what it does in terms of the global order that you talked about is to be seen. As I said, I think what organizations can do is be very resilient, very close to the ground, and be nimble in terms of how they adjust to it. But it's it's easier said than done. From India's perspective, I think there is an opportunity because today, in the pandemic time, we talked about China plus one strategy. I think there is clearly an opportunity for India to increase trade and commerce and increase its manufacturing base. Because of exactly the reasons that we talked about. Global narrative is shifted to, dividing the world into free countries and countries which are not so free. And India clearly potentially falls into the first camp. And there is possibility that more of the outsourcing would go into countries like India, which has the base, the capability, the manpower to support the world in terms of global trade.
During COVID, I'm sure you had to part with a lot of the information to your agents and sales agents, which you would have otherwise kept very close to you in your closed servers. I heard this even more from bankers because of apps. A lot of data had to be given up, which they would originally house only within their own premises. Now, do you see, therefore, cyber risk as another very big possible Six Sigma or a near Six Sigma event?
Absolutely. And look, at the end of the day, as organizations, given what happened during COVID, the lockdowns, all of us had to rapidly transform and increase our digitization levels, right?
Yes.
Some of us were anyway doing it, but at scale, most organizations have had to do this. Without that, in future, there is no survival. So you have to digitize. There's no choice. Just because of the concern of cyber risk, you cannot say that I will be isolated from the rest of the world. Now, as you do that, clearly there is increased risk. We've seen the impact of the work from home also increasing this risk in this period. If you just look at the last year over the previous year, right, the number of cyber attacks have had a 400% increase. Some of the surveys that others have done, what we understand is that roughly 60% of corporates have suffered some kind of a ransomware attack. And when an attack of that nature happens, there are losses both to yourself, what in insurance we call first-party losses. So the cost of a ransomware payment, if you have to make one, the forensics and the recovery, cost, the business interruption, the reputation loss. So these are losses to yourself. But there's also a third-party loss that you're referring to, which is loss of customer data and potentially a liability suit against you because of that. Now, there is no clear, easy answer to solve for this. As an organization, you have to stay as vigilant and as prepared, in terms of having your cyber security and cyber risk management policy, having your governance framework, your operational team, dedicated team which understands this and monitors this risk, what we call, threat hunting and threat intelligence, and a crisis handling protocol if something goes wrong on a certain day. But in spite of all of this, there is a high possibility that something will break, something will, you'll succumb to an attack. And at that point in time, you, as I said, have to have the crisis handling protocols laid down so that you know how to react to it as fast as possible as an organization. And beyond all of that, as we keep saying, finally you should take cyber insurance because that's the only way to protect yourself from some of these losses, not everything. But this is, in my opinion, a way of life. This is something that we as organizations have to be prepared for. And the real worry that we would have really is that this is becoming the way of fighting wars across countries.
Absolutely.
And your nation states, playing some of these roles, the bad actors, as we call it, in this space. And that's something that we, as a nation, we need to prepare for.
Oh, absolutely. I mean, let me add that question then. As a risk management tool, do you think as a nation or at least the financial sector, say people like Reserve Bank, SEBI, IRDA, or even large organizations like yourself, need to have a movement almost or a mission mode of consumer education? Because after all, often the data breach or the giveaway of precious data comes from the consumer, isn't it? You give away your Aadhaar card or you give away some crucial number.
Yeah, more than Aadhaar, I mean, it's just a dumb Aadhaar card itself cannot have an impact. But
yes,
the point that you're making is absolutely valid. I think systematically, particularly the financial services industry, we probably need to do a lot more in terms of creating customer awareness. I've seen Reserve Bank do a lot. We see those ads paying, but I think collectively as institutions, as organizations, I agree with you. We need to do a lot more work. Unfortunately, most of the impacts have been felt because your account has been, swept out. Your money from your account has been swept out. In the insurance sector, we've not seen the consumer impact as of now. But what we've done is we've launched products for retail customers where even at an individual level, you can buy policies and protect yourself from some of these costs and losses up to a cap. That's something we believe will get popular. But I agree with you that as a collective, the regulators, institutions, and companies, we need to do a lot more in terms of creating awareness. And also, I strongly believe, and I'm sure there is a lot of work going on in terms of at a national level, we need national protection against the cyber risk that we are facing going ahead.
As an organization, and especially a leader in the insurance space, how does ICICI Lombard help corporates manage their risk?
Traditionally, the role, you started the session by talking about what we've been trying to do in the last 8 years in terms of creating awareness. So around that time, we felt that as an insurance player, the role that we've kind of crafted for ourselves is very, very limited. Just talking about the fact that if there's a claim, you give us a premium. If there's a claim, we pay you back some claim amount. That's of course our key role. But can we expand our role to say that can we work with corporates to mitigate the risk and reduce the probability of a claim in the first place? And we have, a lot of data. We have experience. We have ability to compare, benchmark. There are a lot of technology tools that are evolving, and we felt that time was right for us to do that. So the approach that we've taken over these years is to use some of these capabilities, data, analytics, experience, capability, technology, to provide exactly that service to customers. Not just risk transfer as insurer, but also risk management and mitigation. So I'll give you a few examples. So today we have sensors tracking some of our customers' cargoes to help them prevent hijacking losses, or for refrigerated cargoes preventing losses because of temperature fluctuations. We've had sensors in some of the premises of our corporates where there may be a fire safety system, but we don't know whether the water pressure is stable and adequate throughout the point. Again, with the sensor, we can give messages or warning messages to customers whenever it goes below a certain threshold. So just to give you a couple of examples. But this is the journey that we believe insurance sector needs to make in terms of moving towards playing a bigger role in terms of risk management solutions. And while I give some technology-based examples, there is a lot that we can do in terms of helping customers with advisory work, in terms of benchmarking, in terms of what we call asset valuation, drone-based surveys, thermography, lots of stuff that we've been doing which can be done at scale, which helps customers, corporates reduce their exposure or reduce their risk.
Actually, your sector has been foremost in using machine learning and artificial intelligence. I hear of insurers saying that very often, because they are able to feed the computers with accident data, often you don't really need a third party to even visit, or even your own staff to visit, say, a car accident site or the victim, because the machine is able to provide most of it from the pictures provided by the customer. You have taken AI and machine learning to new heights. Does it come handy even in your risk management advice to companies or customers?
We are experimenting. So one of the things that we could do during this period, particularly in the COVID lockdown, so we do a risk inspection before we give a cover to a new client, right? If it's a corporate client. Now we could do that through virtual risk inspections. We had that capability for our motor survey. We use the same capability for our corporate customers in this period. What we are now doing is scaling some of those up. Again, virtually, you don't have to have people traveling to the factories, but virtually we are able to survey your site. You may be in some corner of the country, and the access may be may not be great, but you're able to do that. What you can also add to it, and there are solutions that are evolving. We can add augmented reality on top of it and allow the risk engineers to give better quality decisioning, because they're also getting inputs from other experienced sources where we just kind of can convert into digitized knowledge, and that's helping them in terms of providing better advice. Lastly, small volume claims. I mean, we talked about motor insurance, but small volume corporate claims, we've kind of now as a company we've launched a capability, or we've launched a service using AI, your AI and ML solution, where small value corporate claims are also getting paid without any physical intervention, completely digitized using AI and ML. So yes, there's a lot of scope to use some of these capabilities to scale up operations and actually make it more convenient and faster for customers to benefit from it.
Fair point. Well, I have more questions for you on what are the key lessons that managements and insurers have picked up post-COVID. It's a big event in our lives. Those questions to Mr. Dasgupta after the break.
ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners. ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners.
Welcome back to this special chat with Mr. Bhargav Dasgupta, the Managing Director and CEO of ICICI Lombard. We have been discussing his insights into risk management. Mr. Dasgupta, thank you for your patience. Well, post-COVID, a lot of companies are now getting back to pre-COVID, what you can call normalcy mode. Now, what should change? How should they prepare for risk?
Latha, My personal view is that the two biggest lessons that we've learned from the pandemic are one, the importance of resilience, and the second is the importance of empathy. First for your business and second for your employees. And my sense is a lot of organizations have learned that lesson, at least for the immediate future. As things stabilize and if you don't have any more crisis, people forget these lessons. But at this point in time, those are lessons that have been learned. And, traditionally in the past as an organization, we've been trying to optimize everything, right? Cut down costs, manage inventory, just-in-time inventory, don't build redundancies, you just focus on efficiency. I think we've learned the lesson that resilience is important. That's one. The second one, which is on the employee side, I think the importance of empathy is very, very important, clear to all of us. What we're seeing is organizations are also, responding to this. I mean, actually factoring this in terms of, let's say, the employee practices, the policies that they have, clearly a lot more, employee-centric. We are seeing a recognition of mental health,
Yes.
which really most organizations didn't bother about. Even in our health policies, people are seeking some of those, services, mental health counseling, for example. We are seeing a lot of virtualization of healthcare consumption. So, in the past, when corporates would take health policies, they would only pay for hospitalization. Today, a lot of them are seeking out services which are beyond hospitalization.
Okay.
Telehealth, teleconsulting. Earlier, roughly in our survey, 11% of the corporates were interested in telehealth, teleconsulting service. Today, about 75% of them are.
Oh.
So there is a tremendous change in terms of the type of services that they're seeking, driven by those two points that I made: empathy towards employees, and a lot more focus on resilience of operations beyond just optimization.
Well, that's fascinating, this adaptation by Indian corporates. Well, actually, if we had not gone through COVID, I think my discussion would have concentrated more on climate change, which is, another big event outside our lives, but impinging on all corporate and individual decisions. Now, disaster risk management or, it's always considered, it's not considered part of mainstream climate change preparation. Do you think that is changing now and disaster risk management is getting embedded into broadly preparing for climate change? What are your views on this?
So if you look at the number of catastrophic losses that we've had because of weather-related reasons,
yes,
last year we had about $329 billion of catastrophic losses which are weather-related. Floods in Europe, fires in US, cyclones across the world. $329 billion. We had 15 instances of $50 billion plus, incidents. If you look at just the Indian context, traditionally in the past, maybe 5-6 years back, we would have one cyclone every 3-4 years. Last year we had 3 cyclones: Tokte, Yas, and Gulam. Right? We had 3 major flooding events: Tamil Nadu, Kerala, Maharashtra. If you look at the west coast of India, we would never get cyclones. We've had Tokte this year and Nisarg last year. So it is clearly evident to all of us who are willing to accept data and see the reality. There is a huge change that is happening. I mean, the temperatures are going up. We all talk about it. The temperatures of the ocean temperatures going up. That's a huge risk. And the type of incidents that we are getting are much more extreme. Now, in terms of preparedness, I think people are beginning to realize that this is an issue. But I don't see too much of a priori, kind of factoring of all of that into the risk management practices. We are seeing some progressive organizations who are thinking about designing for climate change. I mean, looking at identification of climate change, look at what they can do to improve their infrastructure to take care of events of these nature and on a constant basis monitor. In events that have happened, what we are seeing is people are a lot more prepared. So people are observing and monitoring what's happening and taking precautions. So we had a client who, because of Tokte, they were worried about their road going up to the jetty, and they actually, which was in the line of the cyclone, they actually built a separate access road before the cyclone hit, and that helped them save their operations in terms of business continuity, etc. So people are taking some of those proactive steps, but at scale the answer is no. But we really need to realize that this is a huge impact that's going to hit us, and it's hitting us as we speak, but will hit us even more going ahead.
Okay, now one more word on risk management. Need it be seen only as a cost? Is it increasingly also being seen as a value creation tool?
Latha, you've heard me speak about this for many years as we've done the risk management conference.
Yes.
So we've always believed that risk management is a strategic tool, strategic differentiator. Well-run and successful organizations, people who have succeeded over years, have constantly taken advantage of risk management as a strategic differentiator.
Yes.
That's what gives them going in a sustained manner over the years. If you don't, handle this well, you can't take the risk that you need to take as a business to scale up and grow. And what we're seeing is increasingly there is a lot more awareness and consciousness of this. So from society at large, people are challenging corporates in terms of their reputation, risk, in terms of their sustainability initiatives, in terms of investors looking at ESG scores. So my sense is that there are many forces coming together to ask corporates to, even if they haven't been focusing on some of these things, asking them to take action on risk management. And I think the last 2 years, as we discussed earlier, clearly people have seen the benefit of managing risk better. Companies which were prepared to some extent, you can't prepare for it, but prepared in terms of mindset of having resilience and agility, I think they have done better. And that's something that people have taken away from these 2 years. So my view is that, as we go ahead, and particularly given what the world is going through in terms of potential and order change, I think we are getting into a phase where people will value risk management a lot.
Okay. Oh, absolutely. And I value what I learned from ICICI Lombard and this conversation a lot more. You would have thought that to be in an insurance company, you should either have done actuarial sciences or maybe have degrees in finance. But it now looks like insurers like you have to be amateur epidemiologists, amateur climatologists, amateur cyber risk managers. You have to be multifaceted. That's what reality is demanding from you, and you are coming up to speed. Thank you very much, Mr. Dasgupta, for joining me in this extremely enlightening chat.
ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners. Focus, ideate, innovate, enable.